US dollars. The yen's pretty high too.
Now, the Reserve Bank of Australia is expected to delay hiking interest rates as its board meeting gets underway today.
For more, Bourse Communications Executive Director Rod North joins us in the studio. Rod, good morning.
Good morning.
Tell us all about it.
Well, it's going to be an interesting board meeting because I think of the 22 economists that have been surveyed, not one of them thinks that there will be an increase in the cash rate today. And of course, the cash rate's 4.75%. And I think probably the key thing will be the interest that will be generated from the commentary from the Reserve Bank board meeting, and then obviously the minutes, because that will reveal the thinking behind how the Reserve Bank has seen things play out, particularly in Australia with the natural disasters we've seen, and of course the geopolitical scene, the high dollar. There's a whole lot of sort of mitigating factors there, plus, you know, a lot of the data that we've seen to date for business confidence, consumer confidence and so forth hasn't sort of mirrored, you know, I suppose exactly what they would have liked to have seen. Perhaps there has been some thought that those rate hikes late last year, and particularly the last one, sort of took a bit of an edge off things, because sort of retail's been suffering quite significantly really since that last increase in November.
One figure that is going to play very highly on the political and economic front is the March quarter GDP figure, which we're expecting fairly soon, and that could reflect the impact of those disasters back in January.
Yes, that's right, and I think Treasury have just revised their estimates, because originally they thought the cost of those twin disasters was going to be about $5.6 billion. The latest Treasury estimates are about $9.2 billion. And of course, that will have an effect of probably about 0.5% on GDP. So running through to June, you know, we could see a dip in the GDP as a result of that, because we've got, you know, an issue where there's lost coal production of potentially about 6 billion. Tourism, of course, will be hit probably to the tune of about 400 million. And of course, one of the key things, which of course has happened in both Queensland and Victoria because of the floods, has been the crop damage, and the estimate for that's about 2 billion. So that all adds up to a pretty significant number that will impact on GDP.
Now, the local stock exchange is nudging 5,000.
Yes.
Well, how long has it taken us to get back to that point?
Well, we've actually been there 3 times since March 2009, but it just hasn't gone through and stayed through 5,000, because you might recall back in February we got to 5,014, and then of course we had the problems erupt in Egypt, you know, followed by Libya and all the geopolitical problems. So of course the market dropped quite substantially, but with those encouraging figures coming out of the US on unemployment dropping quite significantly there, because unemployment in the US has now dropped 1 full percentage point from November through to now, and there's some expectation that unemployment will continue to you know, drop there. So sort of overall, you know, that sort of mitigates for a stronger market in Australia, and also obviously in the US. The Dow's at a record level.
We've been looking at the dollar, and things are certainly cruisy for some travellers.
Yeah, they certainly are. Yes, it was interesting to see that figure that 500,000 Australians actually decided to go on a cruise last year, which is, I think, about 2.1% of the Australian population. So there's always an opportunity, even if things are pretty tough, you can jump on board a boat and have a bit of fun.
Particularly when the dollar's like that.
Absolutely. You've got to take advantage of it.
Thanks, Rod.
Good to see you.
Thanks so much.